Good morning, traders and investors. Welcome to Benzinga's Pre-Market Prep, brought to you by Options House. I'm your co-host, Joel Alcon, along with Dennis Dick. On the news desk, Benzinga Pro News Desk, Brent Slava, Jake Liqueur, and Joe Young. And Joe, we got a jam-packed show today.
We sure do, since we're triple stacking our guests these days. At 8:15, we've got Rahul Sharma, Managing Director at, I think it's Neve Capital, Neve or Niev. He's at Retail Guru on Twitter. Then, of course, Thursday, it's Fari Day, so he'll be on at 8:35. Then 9 a.m. we have Dan Levin of CPR Radio. He's the host of CPR Radio, which is a show for comprehensive retirement planning. Joel, you're close to that age, so you probably want to listen to this one.
Yeah, you guys are actually sending me to my retirement a little bit sooner than I was planning on it.
Well, we definitely are pushing. There's no secret about that. But then let's see what we have tomorrow. We have Turney Duff, author of The Buy Side, a New York Times bestseller. Tim Melvin will be on tomorrow. A little change up from a usual Tim Melvin Monday. And then Kevin Ferry, co-founder at Cronus Futures Management.
Okay, Dennis, are you out there in the trade cave?
I am out here, Joel, looking at a pretty tight overnight range. Got up to 1890 and a half, though. Just like we were saying, this market's kind of allergic to the whole 1870s, where it just blew through it the whole time there yesterday. We get up to the 1890s. We seem to find resistance up there. So 1860s continue to be support, but the 1890s continue to be resistance. So keep that in mind for today's trading. If you get up here in the middle of the 1890s, we may find some sellers once again.
You mentioned after the open, this market has no memory. I mean, we came down hard yesterday, and I thought it might slice through the 1870s, but it caught me totally off guard, rallying through the 1880 handle as well. So we're right back up here, knocking on the door of new all-time highs. Tight, not really a decent range overnight. Let's see what happens to that 1890.50. That's the pre-market high. See if we get some follow through. I'll just alert our traders. The all-time high close 1894 and a quarter. All-time high print 1898.50.
Yeah, that's what Dougie Cass keeps tweeting out there, the market with no memory, and he's exactly right, because they will turn around and they'll start selling this market, and then they'll turn around and start buying it. It's pretty much been the buy the dippers in the 1860s versus the sell the rippers in the 1890s, and everything in the middle is just air. So we'll see if that continues to hold here today. We've already been up to 1890 and a half overnight, so we get back up there again. We'll see if those sell the rippers come back to play the game once again. Gold, though, I don't know if I'd be selling this rip, but it's trading up here $9, Joel. And the interesting thing here about gold is yesterday during the vicious rally, it really didn't respond much. It wasn't selling off, which you'd expect from gold if they were going risk on. And the day before, when the market was selling off a bit, gold really wasn't rallying. So it's kind of doing its own thing. It's almost just stuck here at $12.90, and it's now up $9 from that level. But man, like you've been saying, somebody's been accumulating a major piece here at $12.90.
Everybody prepare themselves for a rant.
It is. I'm like kicking
Start ranting.
Yeah, I am like digging in like a bull here. There is something going on here in the gold market. I don't want to start a worldwide gold conspiracy theory, but I am. This 1290 level is just driving me crazy here. Over the last 7 trading sessions, you've had lows from 1290, 160. Now, you did hit a 1282.90 low yesterday, bounced right back up and closed right near 1290. 1290.10 is the low today. I mean, it either has to be the Fed, the Chinese, the Russians, George Soros, Goldman Sachs. I wouldn't be surprised if you got like a Goldman Sachs upgrade of gold next week and the thing opens $50 higher. I mean,
whoa! You're bullish.
I'm so
you think
bullish.
You're eventually getting away from this 12.
Oh, we are. We are in a launching pad here. I feel it. I mean, we had this consolidation in January. This is a longer bit of a consolidation. You just can't stay at this level for this long a period. Above 13.15, if you don't want to buy it, on, I wouldn't call it weakness here. This thing bumps above 13.15. I'm looking for 1400.
Let's quickly look here. 1400
Yeah,
is crazy
1400,
there, Joel.
Dennis. Yeah.
Look at the bull here in gold. You talk about me being perma bullish. Now Joel's the perma gold bull. The only way gold gets to 1400 is if this S&P goes down to 1700. That's my honest opinion. I just don't see the catalyst to drive gold higher here unless we start to get some fear in this market. And it just seems to be no fear in the market. It pulls down, and the buy the dippers buy every single pullback here. And that's why I think gold's just kind of meandering here. It's just hanging out. It's waiting for this market S&P range-bound trading to resolve one way or the other. We're either going to take out the 1900 and start marching, and that's going to be the catalyst to drive gold down, or we're eventually going to take out support in the lower 1850s, 1860s, and start driving towards 1800, and that'll be the catalyst to drive gold higher. But until that happens, I think we might just continue meandering here, there, Joel.
Okay, when we bumped up near 1400 not too long ago, got up to 1392.60 back in March. Was there fear in the market, or did gold just go up there on its own?
I have a goldfish memory. I can't even remember where we were a month ago on the market. Go show the S&P futures and let's see if there's
the day that it hit the
see
high.
if there's any theory to this. So go back. What's the dates on those two highs?
The high that hit 1392.60 was March 17th.
So, it's March 17th. So go to March 17th on the S&P futures now, and let's go check this out.
Okay.
March 17th. I'm going with you.
We were right here. We were 1286, 1287. We were right here, right? Am I right or am I wrong?
I'm looking. Yeah.
My kids get really mad when I say that.
No, 1287, but I'm looking on the S&P futures. Where were the S&P futures?
Back in March.
Yeah. That was the day we had the big sell-off down like 1830 when we were washing out there.
Well, come on. We're only 50 points away from. Okay, I want my steak dinner back.
You want your steak dinner back? You're betting on this.
I'll go.
I'm just telling you. I don't think gold goes to 1400 until this market starts tanking.
All right, this is what we need to do. We're gonna go 1400 versus 1200 for a steak dinner, and I'm giving up the edge.
I'm not betting on gold. I'm not a gold bug here. I'm an equities trader and I'm a stock trader, and I want to talk about stocks. And let's move into some stock talk here because we've had some pretty decent earnings here. We're going to have a retail guru here on in just about 8 minutes. But before that, I want to talk about the Best Buy earnings report because it is actually selling off. It was worse here, though. They just started the conference call and we're starting to get a little bit of a lift. But just on the initial report, 33 cents versus 20 looked good. They actually spiked it up to over 26 bucks here, but then the revenue is no good. Same store sales were down 1.3%. So then they started selling the stock back off, and this got down all the way to 23.76. It has bounced back trading at 24.50, but somebody last night, I was tweeting there, I was talking with Jakey there on Twitter, and somebody last night had an iceberg order, and they were just sitting out there selling stock at 25.10, about 25 cents lower than the close, and they weren't moving. So last night, somebody wanted out. They're happy they got out here because the stock is trading 85 cents lower here this morning.
Wow, this is quite a move, huh? Pre-market action, it did spike all the way up here. You're right, 26.20 high, and then you came down under 24 bucks, 23.76 here. Boy, I don't know. We're just hanging out 24.52. It is trading lower here. We are trading right at yesterday's low, so we're going to use that number, 24.71, and also the low the day before, 24.57. If it can hold in that area, I think you got a chance to go back up to the close. If you take that out, you could be looking at the pre-market lows here near the $24 level. But close, big number to me today.
Yeah, that 23.76 pre-market low is kind of close to the low we had back there on April 25th, about a month ago at 23.87. So there is some support just under $24. And remember, the levels that come into play during the pre-market session can sometimes come into play in the regular session as well. So that gives that level even more relevance. So back under 24, you do have some people that are probably bringing in some shorts, especially the people that were shorting it last night after hours. And so keep that in mind here at 24 bucks.
Okay.
Sears Holdings, also disappointing. Surprise, surprise. These retailers all pulling the same story that they did yesterday. SHLD lost $2.24 a share. Supposed to only lose $1.77 a share. Man, is this a mess. Same-store sales down 2.2%. The revenue beat, I guess if you're trying to find something okay here, 7.88 billion versus 7.75 billion. The only thing they have going for this is massively shorted, and obviously everybody was leaning to the short side here coming into the report, so that's why it's probably not down even more. But it is trading down $1.50 here in the pre-market.
You're just real spotty trades here, just trying to hold the $35 level. Taking a look, I see not a lot of volume here. Nothing really on the charts to support 35 as a support level. What I'd be looking at here is perhaps the next whole number. Well, 33.40 was a low. Let's call it 34. I mean, if you really want to catch some panic selling here, maybe throw a bid out at 33.50 here. What's the best bid out there in this thin piece of
35 bucks.
35?
35 even. Somebody's trying to make a stand there. It's traded quite a bit of stock here at 35, so somebody's trying to block this from going into the 34s.
Iceberg order or just
yeah,
they're
he's sitting out there with
he's
one and not moving. One of those again. Everybody's using those iceberg orders nowadays, especially the institutions. So
you just want to explain that real quick, the iceberg order?
It's just basically when you just show, and we've explained this before, the tip of the iceberg is what it really is. So somebody will show like 100 shares and they've really got like 10,000 there. Now it's gone actually. The 35 just moved, but sometimes what you see isn't there'll be just that first 100 shares is showing, and then there's a whole bunch of stock behind it. So when you smack it for 1,000, it just keeps refreshing at 111, doesn't move. So that's basically your iceberg order in a nutshell. Interesting here, the short interest I just looked up on this, it is still very high. 16 million shares of short, 15.25% of the float. That's still high, and that's still a catalyst to keep this thing floating, because fundamentally I hate this company, but just when you got short interest that's high, you can get these short interest spikes and short squeezes that can potentially happen.
When are they going to get rid of Eddie Lampert?
I don't know.
I mean, he's just run this thing into the ground here. I mean, I think eventually you're going to get some activists coming in there, and
does anybody shop at Sears? Do you shop at Sears?
I
don't know anyone that goes to Sears.
I don't know.
Does anybody in the chat shop at Sears?
Yeah,
anybody
we need to take
Sears?
A survey.
Go Sears! I love Sears. Chat.
Do they have their automotive centers there anymore or not? They get rid of those?
I think they might have got rid of them. But
Yeah.
I was gonna say that I remember going to the automotive center with my dad back in the day.
Well, you know why I never shopped there is because I was one of these people. I owned Kmart. I bought 1,000 shares of Kmart at $7. Thinking, the real estate value.
So you were bitter.
And then Eddie took them down to zero, and then I
Yeah.
got wiped out. And then all of a sudden, this Sears holding comes up, and it was just a total reverse opposite of the American Airlines thing. I never rebought the stock. I just let it go down to zero. And so I do go to Kmart though. I do buy some toiletries and some other stuff there, like once every 6 months or whatever.
Last time I was in a Kmart, I was scared. There was rough clientele in there. The shelves are all messed up. Sazi just has, you go in there and you take pictures. That's exactly what it looks like. I actually bought a hose reel, and I brought it up to the front, and it was the wrong price. It was put in the wrong area, and they couldn't even figure out the price of the thing. So I'm sitting up there arguing for 2 minutes, and then they couldn't handle it, and they just gave it to me from the price that I wanted anyways. So it's just a debacle of a store.
A Sazi field day.
Kmart. And I'm not a big Sears fan either. So moving on. Williams-Sonoma, the whole theme of buying high-end retailers. This is another store that I don't shop at because every time I go in there to look at something, it's like 10 times more than I would expect. Anyways, high-end retailers going up here, just like Tiffany's yesterday. WSM is popping $3 on their earnings report here. We have a report of 48 cents versus 44 cents. Raising full-year outlook, they are citing a better housing market as the reasons for their decent report.
Okay, rip in here north. This is a new all-time high for Williams-Sonoma.
Oh, no, that's it. It's not quite
No, not
there,
quite.
Joel.
Oh, I thought it was.
6805.
6805. And then what did we hit in the pre-market?
Did we take out 68?
No, you're right, Dennis. 67.94.
Bite your tongue, Joel. Bite your tongue.
Okay, 6805. That's a level we're keeping an eye on.
6805. So, and just remember though, yesterday Tiffany's story. We were talking to you and we thought it might continue to run, and some of these retailers continue to get momentum in the direction that they gap. The old gap and go thing is happening here. So be careful. Just because there's overhead resistance here in WSM, and there is a lot of overhead resistance, don't think it can't take it out, because Tiffany's took it out yesterday and it rallied another $2 or $3 after that, got all the way up to 97.40. So you got to be careful just blindly shorting these retailers when they do have a decent earnings report.
Okay, Dennis, we are going to switch things up a little bit today, and we're going to have Rahul Sharma on, Managing Director at Neve Capital. He's going to come on and talk about retail stocks with us. We'll be right back.